Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. So I'll be presenting in this new year Asian Session Live Market Analysis webinar on 5th of January between 5 and 5:30 GMT. I'll give the overall outlook, how exactly the market is expected to make the moves in this particular year, and exclusively I'll give the forecast for this particular week 5th to 9th of January. So I take this opportunity to wish you all very happy and profitable new year 2015. Hope you'll be able to understand how the players are making aggressive moves in the market. And this sort of aggressive moves are part of the yearly trend reversal. I was explaining last year during December that they are bound to make the yearly trend reversal moves during that month of December and also the month of January of the new year. So now you can see during start of the week how exactly they made a massive drop in the case of Euro and GBP and quickly reversed during that of the start of the day. So this, they do it mainly in order to attract margin call to that of the traders who trade without the hedging facility. And so especially the US clients, when they trade without the hedging, and if they don't want to keep the stop, and invariably the players would have given the margin call to such accounts. So this is the basic idea of an extended stop end. In the case of Euro, from 1.20, they came down to 1.1858 area, about 150 pips. And in the case of GBP, from 1.53, they came down to 1.5167 and then reversed the market. So you find that only in the case of Euro and GBP, they made such big moves. And in the case of Yen, they just made a nominal rise from 120.46 to 66. And also in the case of CHF, they just gained from that of 1.0014, that was Friday closing, they went up to 1.0090. And then they opened high and then started gaining quickly and dropped. And in the case of Canadian dollar, also 1.1787 was the Friday close. And from there, about 50 pips they gained and then dropped and holding around that of the psychological level 1.18. And the case of Australian dollar, they came down to 0.8076 on Friday. They just made only about 20-25 pips a downward move and start holding it. So they just made such massive moves in the case of Euro and GBP, mainly in order to give the margin call and also to handle the derivative market, because a lot of traders might be holding the options and the futures positions. And so once the market goes against, then immediately you'll find their options will close with the accepted loss. And afterwards they will gain the levels, but the traders may not hold the positions. So they make the moves purposely during the wee hours, and we might be thinking that just by start of the market they made such moves and not many traders would have been affected. But those who carry the positions from Friday without a stop, they will be penalized. And this is the basic idea of making the yearly trend reversal moves. And also when the stops are there for the bigger institutions, when they have taken their position around 1.20 and kept a stop around that of 1.19, then they just hit all the stops and accumulate the buy positions. So this is the type of aggressive move they make it during that of the yearly trend reversal time. So before going to that of the derived forecast, let me just briefly explain what could be the outlook during the year 2015. Now, the market is expected to make the aggressive moves during this particular year, and we might come across very frequently US dollar gaining moves, but they will be accumulating the other majors by doing such moves, and finally they will say risk appetite moves, and that will be in the form of US dollar weakening move. So we will come across that aggressive moves on either side during this particular year. And you know that last year, the extreme moves were seen in the case of USD yen and yen crosses. And you know very well, USD yen, they took it up from that of 97 to 100 area to about 121. And now you find that USD CHF has started making the move. So from that of 92, 93 area last year, they just showed parity by Friday. And then subsequently, they are expected to make more aggressive moves in the case of yen and yen European crosses. So, sorry, CHF and European crosses. So USD CHF, when Euro is making the rise, you might come across CHF is also making the rise. USD CHF also making the rise as a contrarian move. And the European crosses are expected to make more aggressive moves during this particular part of the year. So the contrarian and regular moves could alternate as far as the European majors and crosses are concerned. Then in the case of Euro and GBP, they are expected to make the lower level consolidation till mid-January, that is till 15th of January, and then gain big till August. And that is what they are expected to make the moves. The uptrend move could continue till August 2015. Afterwards, you'll come across the volatile moves again. USD gaining and USD weakening moves could alternate during this particular later part of the year. Then USD yen and Australian dollar are expected to make big gains. And so understand that they are going to bring in the contrarian moves in the case of USD yen, but Australian dollar could be able to, instead of range-bound moves, it is expected to make some good gains in this particular year. Then USD CAD is expected to undergo either way moves. So they are expected to gain about 100 to 200 pips and then drop 100 to 200 pips. Sometimes you will come across Canadian dollar making the move in tandem with the US dollar. On certain other occasions, Canadian dollar making the move opposite to that of US dollar. And that sort of moves we could come across in the case of Canadian dollar. Then many of the regional currencies are expected to strengthen against US dollar during this particular year nominally. But more aggressive gains could be seen during 2016. Then commodity pairs like gold, silver, crude also expected to gain nominally. Then stock markets are expected to undergo high-level consolidation with the upward stop, and the players will be building their sell positions or liquidating their longs, holding at the higher level, inducing short covering, but not give profit booking opportunity at the higher levels. And then subsequently from next year, they are expected to make the slide. So you could come across major economic recovery in many of the countries, including USA, and thereby you could come across the normalcy coming to that of the market, and that could trigger the risk appetite move. So keep in mind that the market is expected to make more of a risk appetite move till August, and later on you could come across the either way moves in the market. Now coming to that of the weekly forecast. So this is the first week of January, the yearly trend reversal time. Again, so volatile moves with the upward bias could be seen. So this is the weekly forecast for this particular week of the year. So 5th Jan, that is today, a dip and a firm up move is expected during that of the Japanese session, and the European session is expected to show the swing and rise move. Then people might think that Euro and GBP could gain further, but they are expected to make the swing and slide move during that of the US session. So alternatively, they will firm up and slide during this particular week. And you know that in this week we come across the BOE interest rate decisions on Thursday and also the non-farm payroll on Friday. So they are expected to make some dip and a firm up move for that of the European BOE interest rate decision, and the dip and the rise during that of the non-farm payroll, and also dip and firm up move during that of the US session on Friday. And you know that ECB press conference is going to be the next week, so they will continue to the volatile move during this particular week and the next week till mid-month. Then later on, we'll come across visible US dollar weakening moves going to happen in this market. Now, with regard to the range in which the currencies are expected to make the moves, so here you come across that Euro formed 1.1858 aggressively as an extended stoppment during the start of the week, and then they gained the level, and it has come to 1.1941. So the high is 1.1976, which is below than that of the Friday close level 1.2002. Then the case of GBP also from 1.5325, they just made a quick drop to 51.67 and then started gaining it. At the moment, it is holding around 52.87. And in the case of USD Yen, it was making either way nominal moves, 120.66 and 119.99. They showed it, but it is expected to come down in order to give a trigger to the market to go up, Euro and GBP to go up. Similarly, in the case of USD CHF, they are expected to go up to that 1.0100, but they went up to 1.0090, and afterwards they have come down, and it is expected to come below that of the parity during this particular week. And also Canadian dollar is expected to, it has gone up to that of 1.1843 and come down to that of 1.1774, and later on we'll find that it is holding still closer to that of the low, and then they are expected to come down further during that of the European and the US sessions. So you'll come across more of a contrarian move happening with regard to the commodity pairs. Then in the case of Australian dollar, 0.8075 could be the low, and then they breached and came down to 0.8052, and later on they are expected to gain the level, and the high was 8106, but they are expected to go up further during this particular week. So we will come across that the market is expected to show the USD gaining and the USD weakening move alternatively in this week, and later on they could make visible gaining moves from the third week of January. Now coming to that of the market reading, after forming the initial lows and the highs in the case of Euro, 1.1858 and 1.1976, they are not breached the low or the high. Similarly, in the case of GBP also, the low and the high are not breached. And also in the case of USD Yen, they are not breached the high or the low. And also in the case of USD CHF, they are not breached the high or the low. And Canadian dollar also, they are not breached the high or the low. And also Australian dollar, they are not breached the high or the low. So invariably you come across that they are holding the market in the range, and they are expected to slowly make the USD weakening move during that of the later part of the Japanese and the European session. And then later on, we could come across during the US session, there could be some profit booking move of the buys what they have done it. So they are expected to accumulate more of the buy positions in the case of the measures by making some aggressive stop-ins and extended stop-ins so that they'll be able to hit all the stocks which are placed far away, and then they could accumulate the extreme lower level buy positions. So many people might think that technically euro may not be able to go below 1.19 and GBP cannot go below 1.12, then keep far away stops. And sometimes they trade without the stops and the players target them because they know very well the small traders, they don't take positions in the aggressive market. They wanted to see the market and they don't carry the positions overnight because of the margin fear. But the bigger institutions might hold the bottom fishing positions and see that they are stopped out because the institutions, when the loss goes beyond the permittable limit, automatically the positions will be closed as the process of risk management. And so the players take to the extreme levels. So automatically the institutions' positions will close. And the bank would have informed such institutions, now it is a good level to enter on a Friday and hold it. But later on they will say, yeah, the market is expected to be very aggressive. We are supposed to trade with stops. That sort of advice they will try to give it. So in the market, you know that people will try to give the excuses depending upon the market move. Some might say that the market is going to be uh, very volatile, so keep away. Or some other analyst might say that market is going to be volatile and you can make profit quickly in the market. But ultimately, what is more important is understanding the moves. Once you understand the moves, you'll be able to trade without fear. But if you don't understand how the players are making the moves as the sequential trend reversal moves during the year end, year beginning time, then you might find it difficult. But if you know that such extreme moves are done, and you know all quick moves are false moves in the market, if you keep that and you are able to experience and get convinced all quick moves are false moves, and then during such quick drop you can buy, quick rise we can exit out of the positions, then you will be able to do successfully the trades. Otherwise, keep in mind that the market is going to be volatile and trade with caution and take very less positions so that you will not be given the margin squeeze. So we normally note down the high and the low around 3:30 GMT and then try to see whether the market is near the high or near the low. And if it is near the low, we try to take a buy. If it is near the high, we try to take a sell and quickly book profit after keeping stop at entry and start making it as a trailing stop once 25 pips profit is seen. And during this particular year and year beginning time, we'll be able to easily see about 75 pips profit, provided during such quick moves, if you enter into the market, if they quickly drop and stop cutting the new low for 30, quickly enter into the market with stop hedging order to limit the risk, we'll find that the market reverse very quickly and in no time we'll be able to book profit. And there is no question of simply holding bearish and bullish sentiments, and the players are here to create the sentiment and act against that of the traders. But our only sentiment is quick moves or false moves in the market. Nothing more than that. So if you have got any questions, then you can ask me in the chat window or the question answer window. I'll answer to those questions. Then I'll come back on 12th of January, next Monday, and give the forecast for the next week. Thursday, I'll be busy, so I'll not be able to give you a review of the forecast. Anyhow, you can compare it, and I'll be posting in fxtrade.net this link for this particular webinar recording, And if you got any doubt and if you want to have some more clarifications, you can ask the questions there. And when time permits, I will answer those questions for you. So there is a question here in question answer window. S&P 500, what is expected for this year? S&P 500 is expected to make the high level consolidation with an upward stop until April. Afterwards, some profit booking moves will come. Then Karthik, is Euro and GBP accept any one slide? No, today they focused on drop in the case of Euro and GBP about 150 pips. Others nominally about 50 to 60 pips they had done it, but the extended stop and was done only in the case of Euro and GBP. That's what I explained it with the help of the live market quote page, so that we'll be able to see how exactly they have done extreme moves from that other Friday closed level. If you got any question, you can ask me. Okay. Is AUD also expected to start gaining after mid-January? Yes. Australian dollar this time will make one-sided gain along with that of Euro and GBP, not either way moves. So keep in mind that all the time they may not make similar moves. So you have to understand during different time frames, they make different type of moves. And so that we need to understand their intentions. Then only you'll be able to trade without any fear in the market. Now, what happened to GBP? That's the question from George. That is what they made one quick extended downward stop and then reversed it, came to that level of 1.5167 and then gained it to 1.5285 now. 1.5319 is the high. That was a Friday, almost closer to that of the Friday closed level. They made about 150 pips drop and then gain for no big news. And that is how they do it. So also in the case of GBP, they came down to 1.1850 level, 150 pips, and then started gaining the levels. So there is nothing but the margin call moves or the extended stop and moves. So those who hold the positions without any hedging facility or without any stop, they could see margin call. And also those who keep the hedge, and if they don't close the hedging will be making big loss. So they try to see that the traders suffer and the players earn money. Then Will has got a question. And Happy New Year. Okay, wish you the same. Will there be any chance for trending weeks during this particular month, or should we focus on the swing trade? You have to focus on swing trade till end of this month, because end of January, as they are expected to make sudden moves of this nature on the upside as well as on the downside, and it is not advisable to hold the positions overnight or over weekend as small traders. Swing trades are ideal because they also check periodically from time to time their position built up by that of the traders. Then accordingly they make the moves in the market. So none of the technicals and fundamentals will be able to reflect on that. So keep that in mind, that the players are going to be aggressive this time. May you please explain your expectations of GBP and Euro, Yen and Euro GBP? See, as far as the Yen crosses, Euro Yen and GBP Yen are concerned, they are expected to initially make a drop in the case of USD Yen when Euro and GBP are expected to rise. And on Friday, you would have noticed that they dropped USD Yen when Euro and GBP were dropping. And then they suddenly gained the levels in the case of USDN when Euro and GBP made further small drop. So that is how they will make the contrarian move and the regular moves alternatively. So USDN is expected to come down to that of 117 area and then go to 121, 117, 121. That sort of consolidation they will try to make it. And during that time, you will come across that they could move along with that of Euro and GBP on the upside or opposite. So in such a situation, the yen crosses are expected to make the wide range swings. Then as far as Euro GBP is concerned, they are making the variable moves in the case of Euro and GBP. So less drop in the case of GBP, more drop in the case of Euro, that sort of moves. So Euro GBP is expected to make further downward move to 0.76 and then subsequently it is expected to gain to 0.82. Could you expect the gap in Euro USD to be closed this week? Yeah, there is a possibility that they could close it either today during US session or tomorrow. And before the non-farm payroll, they will definitely create another panic conditions. So keep that in mind. You are only doing swing trades. You can do sell and buy trade, but sell only when they make quick upward rise. When they slowly gain, don't sell. Then you might get struck and you may have to hold the sell position overnight. The next day they may make one upward extended move for about 150 pips. You become panic or you stop out, and later on they may drop the market. So it is not advisable to hold the positions over the day. The best thing is do swing trades. Did Eric, any potential for GBP to drop below 1.51? No, it is very unlikely. And the way in which they just made that drop in the case of GBP indicate that they wanted to show the extreme levels only during that of the extended stopping time. They may breach the new low by a few pips. That we cannot rule out. No, it all depends. When plenty of traders take buy position and keep stop below that of the new low, and definitely they will try to weed out such stops and then go up. So anyhow, don't be in a hurry to do the position trade. You wait for them to make accumulation of the buy positions. You know that lower level consolidation with frequent downward stop and will be the type of move they will make till end of January. So whenever they make a downward stop and they may show the new low or they may come down a little bit. Sorry. So you have to be prepared for such downward stop and they will be always quick moves. And if you are a smart trader, you wait for such downward moves and try to accumulate buy positions rather than when they are holding the market like this. When they are holding the market like this, if we take a position, you may have to hold it for a longer time. That may not be very suitable. But instead, when they make during the early and the late sessions, a quick upward or a quick downward move, then try to take positions. Quickly, you will be able to book profit. Any other question, please? No more questions. So I'll just briefly touch upon the expected moves in this year. So this year, the European crosses are expected to be handled aggressively. Last year, we have seen yen and yen crosses were handled. And also, we'll come across the commodities to gain, stock market to make higher level consolidation with the upper stock and moves. Euro and GBP are expected to gain till August. Afterwards, we'll come across either way moves. This week, they are expected to make the firm up and the drop, firm up and the drop. So you try to see that whenever there is a drop or a dip, to try to take a buy and quickly book profit at the lower levels. And don't do position trade unless and otherwise you keep stop at entry in your buy positions. Otherwise, they may hit the stop again and go up. Then you may lose the position without making profit. Then there is a question from Aaron. NGB will firm up to high level. Yeah, they will gain today during till European session, and they will make an upward stop and above that of the high. Then afterwards they will hold high, induce the traders to long, and then start making the slide during the US session. Because either way they are expected to make the moves this week and next week also. Okay then. So I take this opportunity to thank everyone and also FX Trade for the facilities provided to present the webinar. And I'll come back on 12th of January and give the forecast for the next week. So until then, wish you all very happy and prosperous New Year and also good earning from that other market. Thank you one and all.